First of all, thank you for having me back here.
You're
The second
welcome.
time, I'm honored to be here, and thank you all for listening to me. To your question, I don't think we should focus on prices. We should not focus on prices. It reminds me of Oscar Wilde's most famous quotation: "A cynic is someone who knows the price of everything and the value of nothing." So I'm going to talk about the energy transition from a global standpoint. And that story is very, very bad. What's driving the energy transition, we know it's the global warming crisis. That's essentially the main driver. According to the GIEC, the IPCC, Intergovernmental Panel on Climate Change, we have maybe 30 years to hold the temperature of the Earth to no more than 2 degrees Celsius higher than it was at pre-industrial times. That is, at the time of the French Revolution, or when Richard Coeur de Lion was buried at Fontevraud in the 13th century. All right. If the energy transition were viewed as a war, as I think it should be, we are fighting a struggle for survival. If it were viewed as a war, we would clearly be losing it. There is no doubt we are losing it, even though we have all of the weapons, as several of the people here have said, we have all the weapons to win it. We are simply not using those weapons fast enough. And the people who are driving the global warming story are using their weapons faster. And that's what I'm going to show today. This is due to both a political and market failure, and it's worldwide. It's everywhere, almost everywhere. The evidence for the market failure is absolutely compelling. Worldwide, renewable energy investment actually went down last year, 2013. For the second year in a row, it dropped to $254 billion, according to the best data in the Financial Times earlier this year. In contrast to the declining investment in renewable energy since 2011, according to the International Energy Agency, the best available data, investment in fossil fuel increased during that same period, and it approached $1 trillion in 2013. So we have an unpleasant fact. For every dollar bet on hope, that is in renewable energy, we have $4 bet on doom. Doom is an English word. It means death, ruin, unavoidable outcome, bad outcome. So I call this 1-to-4 ratio the doom ratio. And it has produced a global warming constant, a constant. Today's share of fossil fuels, this is from the International Energy Agency's own report, I'm reading it, their exact language. Today's share of fossil fuels in the global primary energy mix, 82%, is exactly as it was 25 years ago. Exactly as it was 25 years ago. So globally, there is no energy transition. We need one, but there isn't one. The 1-to-4 ratio exists despite the warning from the IPCC, the GIEC, to reduce carbon emissions by 70% from 2010 levels. In other words, we have 30 years, maybe not even that, 30 years to reverse the doom ratio. It exists even though the weather consequences of this doom ratio are obvious to everybody. Even Wall Street was flooded out in 2012 by Hurricane Sandy. All the investment bankers in this story know perfectly well how bad the situation is. Now, markets done nothing to improve the story? No, nothing. They've made it worse. They have increased the share of the worst fossil fuel, coal. Here's the International Energy Agency data again. Coal, with 29%, has met the biggest share of energy consumption growth since the year 2000, playing a pivotal role in fueling the economic rise of Asia. So markets are simply delivering us closer and closer to a very bad outcome. Capital expenditures, oil, gas, and coal, and then their supply chains, have more than doubled in real terms since the year 2000, according to the same data, the most recent data from the International Energy Agency. In North America, the doom ratio is a little better, but markets nonetheless are driving it worse. According to the most recent data in Bloomberg in this year, quote, new investment in renewable energy sources went down 5% in North America to $56 billion, the lowest since 2010. By comparison, North American oil and gas companies spent $168 billion on exploration and production last year, more than double the figure of 2009. Most of that money went into shale gas, gaz de schiste, or huile de schiste, petrol de schiste. So that must be a fabulous business, right? Wrong. It is a money loser. This is another example of market failure. The shale gas promoters are selling way below cost. It costs them, according to the best data, the most reliable data, $6 to $8 per million British thermal units, that's the unit it's sold in, to get the gas. What are they selling it for? Click on to Bloomberg.com and see, less than $4 2 days ago, that's what it was. So a bad-spirited individual such as myself would see a coordinated attempt to stop the development of renewables by dumping shale gas. That's what's happening in North America. Shale gas is being dumped to kill renewable energy. For this to happen, we would have to see some kind of political coordination for it. There is some. I will show you in a minute. But first, a more global political failure. 3 examples. In the US, the subsidies for oil and natural gas, and if there's time I can tell you what they are, continue, not touched. But the subsidy for wind turbines, the production tax credit, expired at the end of last year with no chance at this moment that it will be renewed. And that has happened repeatedly over the years. Okay. In Australia, a government that had proposed a carbon tax, boom, voted out, replaced by one that abolished the carbon tax and is trying to abolish just about everything else on the green side that the previous government did. In Japan, the party in power during the Fukushima event and the party that was trying to get out of nuclear, boom, voted out, replaced by the party that built up nuclear in the first place. So in this context, should we even try to forecast the evolution of energy price differences? Because the problem is not merely forecasting technological development. I'd say merely, that's a big issue already, forecasting technological development. But the elephant in the room, the big thing no one wants to talk about, is that most of the price of energy is political. For example, nuclear. If an insurance premium for a Fukushima-type event were actually added into the cost of nuclear electricity, it wouldn't be considered cheap by any measure at all. Of course, we know in France, everybody knows, the choice of nuclear itself was political. In the US, shale gas and shale oil have been aided by hidden subsidies. I think I mentioned a couple of them last year, but I could talk about that later if you want. But here's the amazing thing. They have been promoted by amazingly, just spectacularly overpromising evaluations from a federal government agency, a US government agency, the Energy Information Administration. It should be renamed the Energy Disinformation Administration. in many cases, the actual gas or oil output has been just amazingly less than the agency evaluations. In one instance, last May, just this year, the agency itself was forced to reduce its own forecast for the amount of recoverable, that means how much the oil they could actually get out, shale oil in California, which was supposed to be the new Kuwait, the new bonanza. It would make the US oil independent. The original figure, 13 billion barrels of recoverable oil. The new figure, after they said, oh, we made a little mistake, 600 million barrels. A mere reduction of 96%. Okay. In the meantime, as far as the shale gas revolution in the US, promoted by the same agency, which had given these stupendous figures, oil majors are exiting dry gas plays. Dry gas plays means you drill down and you don't get liquids, you get just gas from the hydraulic fracture. They've been getting out of that, and they've been writing down their investments. Major oil companies, Shell just announced a major write-down last week. Total announced that, well, we're switching into the wet gas plays. That was about a year ago that they said that. Okay. If there really were a shale gas revolution, then the big oil companies would not be getting out of it, they'd be getting into it. So there is no shale gas revolution. It was something done for other purposes. All right. If we are to survive, oh, by the way, it's the same story. That same agency has said, oh, stupendous shale gas in Poland. Forget it. When they actually looked and tried to get some, too expensive, not so much. Same story in the Ukraine. Same story in China. Same story in Algeria. All promoted by that same federal agency. It's amazing. Okay. So, we have to have an energy transition to survive global warming, and we have to have it fast. But focusing on price is not going to get us anywhere, except to raise the question, how much are we prepared to pay to actually have a future? That's it. Thank you very much.
Thank you.